Joining us now in the after hours is Rob Koyfman. Rob, we were having a little chat before the show about New York versus London because you did spend a little time in London,
Yep.
and you didn't think you weren't quite a fan.
I wasn't a fan.
No,
A
Man,
fan of what, though?
a fan of London.
London.
But you
Thank
know
you.
what? He's a typical American. You got to listen to why he wasn't a fan.
All
He
right.
couldn't order. He couldn't Uber Eats his food at 12 o'clock on a Tuesday. I should tell your story before you. Why do you tell us why you didn't like? Why you think New York is a better city?
did you guys live in London before?
No, I've
No.
never. You know what? I've been
I go
Toronto
I go
boy my whole
drinking there,
life.
but that's it.
Got it. Okay. So I graduated college. I'm in New York for 5 years. New York is great, especially for someone in their 20s. It's like you have a lot of different people in one place. It's also just you have these like doorman buildings where everything's like taken care of. You could just get packages delivered there, and you could order food at whatever time at night and whatever it is. London is like New York in the 1850s. All these Victorian homes. It's like you're walking up this 4 flights of stairs. Your bathroom sink has like hot and cold on separate things. You have to like combine them together in the little faucet to like wash your face, and it's just like super inconvenient. Um, Everything closes at 11 o'clock because that's just how London is, especially the pubs. Like they do not let people drink past 11, or else everyone would have
Yeah,
alcohol
because they
poisoning.
start at 2. That's the point, though.
They start at 2, which is the craziest thing in the world. You're coming back from lunch, and all the pubs are filled with people who aren't going back to work, who are just staying there. Um, and yeah, you definitely, I never noticed this. Maybe I was kind of like young, but in New York, you don't feel this kind of class separation. In London, you definitely feel it a lot more in terms of like cliques you're part of, and the like going out scene there is more of like these members clubs. You have to be part of a you have to be a member of a club to get in somewhere, which I was like,
Yeah.
this is like really weird. And it really matters where you went to school, and it really matters how you pronounce your R's and your H's and your E's.
For
Um,
sure, because they'll look at your accent.
they'll look at your
I have a
accent.
story to tell you. Let me just like
Perfect. Yeah.
interject quickly with my story. And I love London. Actually, I'm a huge fan. I would love to live there, and I love the British. I love their sense of humor. But there's no doubt about it that they are classist at times. And I experienced this when I was a young man and a young kid. Actually, I was a teenager, and we went to England to play squash. And I know you're probably going, "What a d bag!" He was playing squash. You're already kind of judging me, but don't judge me. So we were at Eton. Now Eton is the school. It's like where kings went to where the kings go to school. It's the kind of boarding school of the UK. And we were there, and we were spending the night in the dorm with everybody. And I was introducing myself, and someone said, well, hi, well, I'm, Charles, blah blah blah. What's your name? And I said, my name is Kevin Muir. And they
Mhm.
said, oh. And I said, what? And he says, don't tell anyone your name is Kevin. And I said, why? And he says, that's an Irish working class
Oh
name.
my God.
So they were still like, basically because my name was Kevin, they were looking down on me. So I
Yeah.
hear you. It's a
Yeah, but
definitely,
I look down on you because your name is Kevin as well.
come on, all the Kevins out there get a rally behind me. I do like them though, because think I find them very the English, their dry sense of humor is very fun. It's kind of more, and
Oh
maybe
yeah, I
we as
know.
Canadians are more
I
used
have
to
great
them.
time in London all the time.
So,
Yeah,
so,
no,
so, so,
definitely
It's a great place to visit anyway.
for
so,
sure.
and by the way, I loved my time in London. I'm glad I did it. But like there's so many benefits to it. So the thing people told me is you're gonna hate the weather, and I thought the weather was actually better than people made it out to be. It wasn't that bad. It rains like a little more than New York. And people said you're gonna hate the food, and I love the food there. I think there's a lot of really cool Indian and Middle Eastern influence in London, so I actually really like the food there. And you get to travel anywhere in Europe. It's like $45 on EasyJet to like anywhere in Europe, which is amazing. But in terms of like, did I prefer New York or London? Definitely preferred New York for the reasons I sort of stated before. But London is really cool city. A lot of good things going for it as well.
Yeah.
Nice.
There we go. You fixed it all up, Rob. It's
Yeah,
okay.
I don't
We
want to be.
insult all sorts of things all the time. Don't worry about it.
Yeah, you're gonna cut that.
And you know what? No Londoner will think any different. They'll be like, "Of course he said that. He's a New Yorker. They think that that's the center of the universe." Like and the New Yorker will be like, "Of course we think that. It is the center of the universe."
It sure is. It definitely is.
There we go. See.
And so,
Okay.
so I want to circle back here because you made a statement saying that your squiggles were better than my squiggles, and I won't deny that you must
I
be.
said pardon?
I said pardon. No, but so we actually Rob was doing a webinar for the CMT for the technical analysis the association there, and I was doing one just a couple weeks after him. So I think we'll have to circle back and see which one had more views. No, just kidding. But
So Rob,
but
you practice the dark
Yeah.
magic as well. You're a CMT as well.
that's where I was going to get to.
Oh, sorry, I didn't mean to step all over you.
Yeah, yeah.
And I'm not a CMT, but I do have my CFA.
So you see, he's not a dark magic guy, Patrick. He's
No,
not.
I
just kind of.
I like technicals. I'm a huge, technicals big part of my process, but I just never got the exam.
That's right. But what were you presenting when you were on there? Were you just doing some of the cool shit that you were doing on your platform for the webinar?
It was basically trying to demystify fundamentals and showing examples of how technical analysts can use fundamentals to enhance
Which
the
I love.
process.
So Patrick, he was trying to tell the dark magic guys that they shouldn't use so much dark magic and they should go use fundamentals.
Well, there was a MACD crossover on the PE ratio rising on this. No, but so Rob, what kind of stuff were you showing them?
No, so I think it's like it's funny because like technical people think like fundamental people are just out of their mind, have no idea what they're talking about, and like they're always wrong about targets and estimates and everything they say, and then fundamental people are just like, are you like fucking serious? Like you're looking at a chart and then historically the price is going to tell me what's going to happen in the future. You are out of your mind. And I think there's a misunderstanding about both fields from the other.
Yeah.
And I think they're just looking at the truth in a different way. Technicals is all about history. It's all about looking historically, and really, it's about identifying momentum and changes in momentum. And there's a very overwhelming evidence that momentum is a very effective factor. That things that are going up continue to go up, and things that go down continue to go down. And that's been proven across asset classes, and it's undeniable fact of just
the irony of what you just described, though, is the third school, which is behavioral finance. That actually is the linkage between the two, right? Like in the end, what happens is that from human nature, a lot of investors chase the things that are working. Because that's where they perceive the returns being, and they want to own the stuff where the money's being made, and so it becomes like a self-fulfilling feedback loop that basically the faster something goes up, the more it becomes to everyone's attention, and the more everyone wants those same returns, and then therefore more money flow comes into that area, driving the price higher. And it has absolutely or has nothing to do with fundamentals, because obviously many times fundamentals are the backdrop from which the buying started in the first place. But that is what technicians try to observe, but it is very behavioral, isn't it, in terms of how it comes around?
Yeah, so I think that's a great point in terms of like why does momentum work, and is it a behavioral thing? So that this is something that I've thought about a lot, and I've never like been able to convince myself of the reason. I think what you pointed out, this kind of fear of missing out, human nature, chasing returns, is definitely a part of it. I think there's an element of reflexivity here, which is something that Soros talked about, which is like if a company is going up, well, not only is the stock price going up, but it's actually going to impact fundamentals because the company can now hire better employees. It can now raise capital at a cheaper level. So the actual price impacts the fundamentals, and then the fundamentals impact the price, and you have this reflexivity cycle. So I think there's a bunch of elements
Yeah.
that go into why momentum works, but it's undeniable in terms of scientific literature and backtesting that momentum is a very strong backward-looking factor. Now, the thing that I think technical analysts miss about fundamentals is that fundamentals work as well. It's just that fundamentals work on a forward-looking basis. So if you look at a forward-looking fundamental, meaning like you can predict the future of fundamentals, you'll do a really, really good job of finding stocks or finding things that work and don't work. The challenge is that a lot of people, when they look at fundamentals, they'll look at historical fundamentals and then pick stocks based on that, which is not the way that works. Again, the future fundamentals is what drives stock price, and as a fundamental analyst, it's your job to predict the future fundamental, whether revenue will continue to go up or whether earnings are going to continue to decline or whatever it is. I think that's what most technical people miss about fundamentals in terms of that forward-looking challenge of the job.
Well, to contribute to that, I don't think I actually disagree with anything you said because I think that you're bang on. But fundamentals in my mind, it's hard to justify that there could be a technical uptrend that sees a legitimate and sustained move if it doesn't have the right fundamental backdrop behind it. I think the two sort of often go hand in hand, unless of course it's Bitcoin, but but that's a whole different story. But obviously, I think that often the best technical trends often are accompanied by great fundamental stories. Do you think that makes sense that way?
Absolutely, and the two have to agree with each other. So
Yeah.
it's very rare that technicals will look one way, and then fundamentals will disagree. And actually, when that happens, that presents a pretty interesting opportunity. Doesn't mean that one is always wrong. It doesn't mean that like when the two disagree, technicals are always right or fundamentals are always right. But I think eventually they have to converge, and when the two diverge,
Hmm.
it actually presents a pretty interesting opportunity. And that was one of the things that I tried to talk about is when the technicals will give you a much earlier signal of something happening than fundamentals. And so one way to marry the two is to look out where technicals look attractive or start looking attractive, and where fundamentals are at an extreme or at a potential turning point. And the
Right,
technicals
right.
will because they're real time and they're everyday, will give you a sign or will tell you when that's happening on a much more higher frequency basis than actually waiting for the company to report or waiting for analysts to lower estimates or whatever it is.
Yeah, yeah. What do you think of that, Kev? No
Oh,
comment. You're
no, I
you're
don't.
laying
I
low.
No, I don't disagree. You know what? As much as I kind of give you guys the squiggle guys a hard time, you know me. I'm actually more of a squiggle. I
Oh
just don't
no.
like. I don't like. No, listen, Patrick. I don't like assigning the same sort of certainty to chart formations as you guys do. So when
Yeah.
I sit there and if you told me that if we get a situation where this is overbought by this amount and blah 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 and a whole bunch of things, then I understand that there are definitely technical kind of backdrops that skew the trade in your favor. Where I have trouble is when people draw lines and go, "This has got to hold. There's no way this is going to not hold." And then what happens is inevitably, the more people that believe that, the more likely it is that it's going to go above that line, suck everybody in, and then go right back down.
Right.
And
Yeah.
I just think that the market is much more is much more complicated than what a lot of times that kind of simple trend line drawing. And I'm not kind of shitting over it saying that it doesn't work. I think that Paul Tudor Jones is the first one to say you got to marry them both. And
Yeah.
I would never in a heartbeat, like never in a million years would I go and say you shouldn't look at charts, you shouldn't go look at that, you should just ignore the things and go look at fundamentals only, because that's a fast way to the poorhouse. Like at the end of the day, you have to do risk management, and risk management is often helped through technicals. I just have trouble when it's only technicals and when people don't
Yeah.
really understand the risk and when they're just drawing lines and it's just simple drawing lines. But there's lots of guys out there that are doing very sophisticated technical analysis that I actually am a huge fan of.
Right. Right. Well,
Yeah.
the one thing I would say is like just because something is fundamentally cheap doesn't mean anyone else gives a shit. I mean, the
No, I
real
agree,
money,
but that's back to your point.
the money is that identifying when everyone else gives a shit,
Yeah,
right?
but that's back to Rob's point about
Yes.
momentum actually being what you should be looking for. And if you told me I'm doing a screen for cheap stocks that are all of a sudden have momentum, and if you called that technical analysis, I would be like, I'm all for it. Like I'm 100% behind that. Because what's happening is the technicals are showing ahead of time that all of a sudden it matters. For whatever reason, it's mattering.
Yeah, you just when everyone else gives a shit.
Yeah.
Yeah, and Kevin, I love your point in terms of like sizing and because that's like if you draw a line and you say the market can't go below that, you're not doing technical analysis because technical analysis is listening to the market. So it's trying to understand if it does go below that, what does that mean for this asset or this stock, and what are the implications for other things? And I think people there's a lot of bullshit in technical analysis, and I think people draw these lines like when we were looking at XLU, if you kind of like take that and like, oh, I think, XOU is definitely going to do this. Like, I'm not sure if that's the right way to look at it, but I think kind of like when we look at it, XOU is in an uptrend. That's like, that's just, and that's what we could say right now. If it breaks that uptrend, then we need to reassess like what's going on and how much downside and is it being supported by other things. Like
Yeah.
one of the, when we looked at that gold chart, it's really interesting. Super powerful technicals for gold and gold miners. But then if you look at the dollar isn't doing anything, right? And so that's kind of like it's an interesting then discussion and thought process of two assets that should be related. One with very positive momentum and technicals, and then the dollar like saying like, I don't really care about this, and that kind of like leads to some thinking and understanding of why that's going on.
I wonder how much of this is the Ray Dalio effect. Like it was just a couple of days ago that he started plugging gold in his most recent piece. I wonder how much of that is investors chasing his big recommendation. But who knows? Sometimes big players like that throwing a headline like that out there can influence the liquidity, right?
Yeah, absolutely.
Yeah, yeah. Oh, anyway, what
Okay, so we
else?
got to tell us. You have some stories about kind of interactions when you've gone into the business of running a website,
Oh yeah.
or like you got some good stories for us on that side.
Uh, what are some of the craziest stories from some of these members that come in and try out your website?
We get such like because we just have like a contact us on our website, and so we get the craziest requests for data, like these esoteric things that I've never heard of. People just people being dicks and just like, hey, like I want this, and why isn't this here? I'm like, it's a free website, like relax. But it's like being very aggressive about it, not like we the reason we have it there is for requests, but people just being very rude and kind of just like, well, why isn't this futures data real time? Like, I'm not going to use your website, and I'm like, cool, don't use our website. Uh, but my favorite story from our users is I send out email updates in terms of like our product and what we're introducing. So if we build something, if we like introduce global yields, I'll send out an email that we've just introduced global yields, and my email is open, so people could just respond to that email and be like, hey, whatever, give some feedback. So we sent I don't know if you guys have like on April 1st and April Fool's Day, we sent out a April Fool's email. So like some companies do this, they'll send out an email. And so my email was like, hey, we have this new feature. It's we basically use the AI and machine learning to really train our algorithm, and it predicts stock prices with a 99% confidence interval. We hope to get it to 100%, but really excited about this new feature. Here's the link. And when you clicked on the link, it took you to the Wikipedia page of April Fools. Like what is April Fools? And one of the people
That's
responded
awesome.
just like, "Hey, the link doesn't work. It takes me to some Wikipedia article. Can you send me the link of the of the function?"
I'm really interested in your system. It sounds good.
That was like my favorite. I was like, "Oh man, you completely missed the point of that story."
Oh, that's funny. It's also funny that guys phone you up and or send you notes and give you a hard time because this free site doesn't have something.
Yeah,
Like
yeah,
it's just shocking
It's
to me.
it's not
You know,
free enough.
yeah.
I get the same thing with my macro tourists. Like guys phone me up and they want or email me and they want to fight about like my market views, and I'm like, fine, go do the other side of my trade if you think I'm such an idiot. Like I don't care. I have no like skin in the bones, like skin in the game to try to convince you that this is something you should do. I'm just telling you what I do, and I'm offering it for free. And if you disagree, so be it. And I'm kind of flabbergasted at the like
Because people take it personally,
but
right? Like
why,
at least
though?
some people do. I don't know. They don't have enough beers with us on the huddle.
Like,
That's
I
why.
don't get it. Like I
Our
could
huddle
just-
listeners are the best, aren't they? Like
for
they-
sure. Well, do you know what we've learned the secret, Rob, to having all sorts of different listeners is that if Patrick and I disagree, we know that at least we're like somebody.
50% of the people will
they
agree
with
like
the-
one of us.
So sometimes they think I'm an asshole, and then sometimes they think Patrick's an asshole, and they just kind of go around, and they're like, "Oh, this week Kevin's an asshole. Oh, this next week Patrick's an asshole."
I love it.
Although we do have problems right now because we're both bearish.
What?
I know. We
You're-
should actually
you're-
talk
you're-
about this.
You're fucking it up for me, dude.
That's why
No,
you're
I
having
know.
me on. That's why you're having me on.
Are you? Oh, are you bullish?
Yeah, he's bullish. Yeah,
Yeah,
he's bullish.
Like you think we still go higher? Like you buy this? You're in my old camp. There's nothing that's worrying you.
I mean, there's always a lot of things that's worrying me, but I think
No, okay, but like there's nothing that's changed you recently.
no, the evidence is that we're heading higher.
So I'll tell you what scares me is the fact that like when I used to say that, everyone would tell me how wrong I am, and lately people have been telling me I'm right. And I saw Mike Novogratz.
Ultimate fucking contrarian.
Yeah.
Like, okay, Rob, you know what? Listen, if the moment everyone agrees with Kev, he is so uncomfortable. Like he starts scratching his skin and he gets nervous and he gets the sweats and like why does everyone agree with me? This is something wrong. Like he's only ever comfortable when he's like fucking doing the opposite of everyone else. And as soon as everyone jumps on and says you're right, then he's fucking nervous.
Okay, but you have to agree that when Mike Novogratz sent out his tweet about how great the S&P looked, it
marked
kind
the
of-
top.
it's kind of stalled, right?
Yeah.
That
the
guy's
short term.
that guy's definitely a contrarian indicator historically, but I don't know. I agree with him now.
He's usually wrong, except this time when he agrees with me.
Yeah, exactly. even a broken clock is right?
Yeah. Twice a day.
Oh, yeah. You know what? I had a Twitter follower say something to the effect that if Kevin saw it raining outside, he would not take the umbrella because only sheeps would take the umbrella and assume that it's going to continue raining the whole day. And you know what the funniest thing about this story is? That I'm from Winnipeg. I'm from the prairies. And we don't use them. Well, at least I didn't grow up using umbrellas, so I actually hate them, and I don't use them ever, and I just kind of suck it up. And I'm always complaining, and I never use umbrellas. And the fellows at work are always like, "Why don't you put an umbrella?" And I go, "I don't know. Umbrellas are just kind of something like, other people do. I'm not going to do an umbrella." And I'm always like just soaked. And I'm so stupid. And so this fellow wrote this on Twitter, I said, "Little does he know how right he actually is."
Oh my God.
Okay, you got to tell us some more Caxton and stories. Like, so what was it like working at the big shop? Like, so for people that don't know, Caxton is one of the largest hedge funds around. I guess Bruce was featured in Market Wizards, and he's right up there in terms of for firms. Like, he doesn't have as high profile in terms of being in the news, but in terms of in the hedge fund community, it's right up there with Soros's firm and all the other kind of Julian Robertson and all the like he's just one of the greatest shops ever. So what was it like working there?
It was awesome. It was an awesome experience. I think I was like I was probably a little too young to really appreciate it. I joined there when I was like 26, and I'd never. It was one of my first buy side jobs, and I was dealing with a bunch of senior macro analysts trying to tell them what equities were implying and doing and coming up with equity ideas. But it was really, it was a really great learning experience. I think the other thing about macro, what it taught me is, I always thought macro was like these economists sitting in a room and really predicting like what GDP growth will be and stuff like that. And macro people are just the most ruthless traders and really just trying to make short-term trades and really take advantage of dislocations. I think these kind of like tail trades, these like the 2008 trade or the Bank of England trade that Soros did. That's definitely part of the macro lore. But I think just in general, day to day, these guys are just really, really day trading and really trying to figure out how to make pennies and dimes every day rather than really kind of like living and really trying to predict the economy and model future interest rates and stuff like that. So that was my experience.
So that was your big surprise, was the fact that there's a lot more just grinding trading going on, taking advantage of market structure and flows and stuff, as opposed to making big, huge bets in terms of where GDP or where a currency is going to head for the next year.
Yeah. That maybe that was just like my own ignorance, but I just macro just thought like these big macro views, and I think macro people definitely have views, but they're not going to sit on a trade and be wrong and have the trade go against them and say, hey, I'm wrong, or I'm losing money, but I think this will work. They're very, very focused on tactical short-term opportunities and really making sure to size the trade correctly. I think that was kind of like the biggest thing that I learned and was surprised about.
And did they? Now they're a big fund. Did they have trouble getting the liquidity that they needed? Like, did you find like them struggling and being bigger than the market a lot of times when they wanted to execute trades?
No, because they deal with such liquid assets, and they're dealing with bonds and rates, rates and FX, and futures. Even with equities, when we were doing equities, we would build these baskets. So we would represent a theme and build a basket of stocks to trade that theme. So it would be spread out among 20 or 30 stocks. And look, when we were doing this work, we always had liquidity in mind, so we would exclude stocks with thin liquidity. But I'd say the benefit of dealing with these macro instruments is that the liquidity is super deep, particularly in the rates and FX market.
Fair enough. That's interesting. Yeah. Okay, well, you know what? We'll call it a night, and we'll let you get on, Rob. Why don't you kind of give us one last plug of where people can find you and where they can sign up for your great product, the free charts. And don't phone them up and yell at them and tell them that it's missing real-time quotes and stuff. No soup for you if you find that, So why don't you give us a little bit of one last kind of overview?
Plug.
Yeah. So in our defense, we do have real time equity prices for U.S. stocks. So we do have that. But when people start asking for like real time futures, which cost like $80 per person that we would have to pay at the exchange, we can't provide that for free, unfortunately. So the website is koyfman.com. Please go check it out, create a free username, start using it, and hopefully it'll help your investment process.
Great. Well, thanks again. Thanks for being with us, Rob.
Thanks, Rob.
Thanks so much, Patrick. Thanks, Kevin. Great to be here.